Hi everybody, my name is Vroukje Jansen and I am here introducing the funding masterclass of the Techleap Summit. A warm welcome to all of you. This year's theme is how to scale up Dutch tech. But let me first start with some practical information. The chat is open and the Techleap team is present to answer all your questions. And if you want to share your story, you can use the hashtag Techleap Summit. Please, let's welcome Elin Valtet, part of the Techleap Capital team.
Thanks, Vroukje, and welcome all of you to our funding masterclass today. At Techleap Capital team, we received numerous requests from you all related to fundraising. How to approach, how to position, how to pitch, how to connect with investors. We know that money is key to growth, and we thought, who's better to share insights and tips with you all than some of your peers who have raised millions of euros for Dutch startups. So we have 3 CFOs with us today. Let me start with introducing Eli van Godever. He's currently CFO of Siver, an IT software security company. He also raised money for Eclectic IQ, venture capital. Over 50 million euros you raised in total. You've done a lot of different deals. What have you done, Eli, and what type of deals? What type of deals and how many have you done in your career?
Thanks for being here. So I think over the last 10 years, I worked on indeed a wide variety of deals, ranging from distressed debt to small, mid-sized M&A deals, real estate, also some commercial deals between soccer players and consumer brands. But lastly, I think over the last 5 years, mostly venture capital, of which the most recent transaction was one we closed last October, 17 million indeed for Siver. So during the Corona situation, made it pretty interesting. Yeah.
Well done. We're looking forward to hear more of that. We also have with us today Claire Tanger. She's head of finance at Dance, an e-bike subscription business from Germany. And you previously worked as a CFO at Fastnet. You raised over 50 million euros over your career, and you also worked on the investment side. Claire, thanks for being here. Tell us a little bit about the type of deals and how many deals you've done.
Well, thank you, Elin, for having me today as well. So I've done also, similarly to Eli, I've done a couple of different deals as well. Most recently at DOT, it was very venture capital focused, but in my time at Fastnet, we raised over 35 million in all kinds of different forms and shapes. Of course, also venture capital, but we also raised retail bonds from private individuals. We've done subsidies there. We've done the whole range of funding. And we IPO'd at Nextchange when I was there, which was definitely one of the highlights in terms of funding. Great, impressive. We also have with us online Wijnand van de Kalsede, who is currently CFO at Virtua Gym. Wijnand, thanks for being with us today.
Thank you for having me here.
Yeah, so also just quickly, before Virtua Gym, you also had different CFO positions. eBuddy, Fox IT, Park B, and you also worked on the investment side. Can you tell us a little bit how long you worked with startups and how many or different types you've done as a CFO?
Yeah, quite a long time right now. I started my career in IT, and then I joined a seed capital investor, a venture capital firm, where I got introduced to the startup world. And since then, basically, I've been a CFO at startups and scale-ups, including eBuddy, indeed, Fox IT, Park B, and currently I'm CFO at Virtua Gym. I've also been involved in several types of fundraising, so loans from banks, equity money from venture capitalists, subsidies types from RVO, like WBSO. So yes, I've got a lot of experience working for different startups and scale-ups.
Great, so it's great to have you all here. So we want to keep this session interactive. And we have 2 founders with us today who will ask our panelists questions. First out is Peter Waller. He's a co-founder at ChargeTrip, software navigation platform for electric mobility, a serial entrepreneur and fascinated with sustainable businesses. Peter, thanks for being with us. I'll let you ask your question to the panelists.
Yeah, thank you for having us. My question is, we are operating in a relatively immature global market that has great potential, so EV driving, e-mobility. We have currently a large number of different types of customers from all over the world, mainly Europe. And we are planning to raise a Series A by the end of the year. However, at the moment, we don't really have a repeatable sales model. So the customer types come from different places. And the big question is, so how do you raise a Series A without having real repeatable traction? But that is very much looming on the horizon.
Thanks, Peter. I'm going to start, Ellie, with you. I'm going to let you all chip in on this. So
I think, first of all, if you're in the early stages of your company, it's not that bad if the sales process isn't that repeatable yet. At the same time, probably if you now have a lot of customers or you feel a lot of traction, then perhaps think by yourself, why is it not repeatable? Perhaps there is something repeatable underneath that you just don't see, but is really, really there. And I think lastly, you mentioned you are in an immature market, or you consider the market to be immature still. And I think, or I'm inclined to say that that's probably really an asset you have, and you should present as such. Because the fact that it is an immature market means that it's probably a blue ocean of opportunities that is there to be captured. And it's only finding that twist and finding how. But you have another 12 months, you say, until the end of the year. So I think you'll be fine.
Good. Thanks. Claire?
Yeah, well, I think it's somewhat similar to what we did at Fastnet when we started fundraising in 2014 already in the electric mobility. So I totally understand the question here. What we focused on is on building a very strong story around the business case in the future. So focus on the market, how big the opportunity is going to be, even though right now it is not yet as where you think it is, for where it should be, but you focus on the growth and the potential of the future. So you're basically, you're selling the dream there, and I think that's what I would try to focus on.
Yeah, interesting. I've heard that and had that conversation actually with other investors and founders on selling that dream. Like, if your market today is immature, what do you, especially if this is what you're doing, how do you see that market in 10 years? And that's what investors are going to buy into, right?
Yeah, exactly. Yeah, so usually there is already a problem that you're trying to solve, and that problem can be really, really big already today. And so that will develop into a huge market going forward.
Yeah.
I think that logic.
I think it's a good way to think about it. Also, if you think about some of the largest companies today, like the Ubers and the Airbnbs, no one would have imagined that these markets would look that way when they started off, right?
Exactly.
So,
yeah.
Wijnand, do you also want to share with us your thoughts in relation to Peter's question?
Yeah, Peter seems to suggest that selling itself, or the sales cycle, or the way they sell is the most critical thing to raising funds. In case you haven't really put that in place and as a repeatable process, there's still other parts that are relevant to fundraising. So you can build your team, and obviously the product and the proposition is very important. If you look at selling and the sales process, and you mentioned you have different types of customers, I would try to learn from those different types of customers in terms of what it means for the sales cycle, the length of the sales cycle, the customer acquisition cost, and other metrics around your sales. That way you can learn how to basically optimize your pipeline and make sure that moving forward you take the right decisions in to whom you sell and how you're selling.
Okay.
I hope that answers your question.
Well, let's check in with Peter. Peter, thoughts on the replies and the answers here from the panel, or anything else you'd like to add on here?
Yeah, no, for sure that helps. Also, actually going back into the story of the acquisition of the different customers, that is super interesting because once you acquired them, you sort of forgot the way maybe you got there. And also focusing actually on the immaturity and the dream is good to get to reaffirm that actually, because from day to day, you sometimes forget that actually is a massive asset and opportunity, because you also tend to get into conversations with VCs about monthly recurring revenue, and you get dragged into these discussions a bit too easily, maybe. So that's actually really good to take a step back and build the case unapologetically around the entire dream and the potential of e-mobility, especially for commercial vehicles in our case.
Can I also ask you, Peter, in a little bit relation, this is you're looking to raise a Series A. How are your conversations going with the previous investors? You already raised money before.
Yes, so we're slowly starting those conversations up. We have larger and smaller investors, so those conversations vary through investor type. But I also feel that they are also scouting the market together with us to see what other type of venture capitals or corporate venture capitals would be interested in joining for the good of the company. So those talks are a bit all over the place still.
Okay, maybe the panelists can share a little bit your thoughts on this in terms of how do you work most efficiently leveraging existing investors that you have when you need to raise more money, both from a network and a money perspective, right? Claire, maybe you want to kick off.
Sure. Yeah.
Raised money throughout the whole growth.
I'm a strong believer in using your network. A warm introduction is 10 times better than just a cold email. So in that sense, yes, I would definitely try to use your network in that sense. Who do they know? Who can they help you with? How can they get you onto the next level?
How important was that when in your fundraising processes, Ellie, like the existing investor relationships, if you didn't raise the first round or the seed?
So there's of course always the element of adding people to the cap table. So that is obviously a financial transaction, but also there are reserve matters and other things that you'll have post-transaction that you'll need to share with the new investor that accedes to the cap table. So it's a process that you always need to navigate. And then, of course, like Claire said, like in any transaction, it's important to know who the buyers and the sellers are. And typically, investors that are currently already working with you will know who the buyers can be for the shares that you try to sell. So that definitely helps also to scope who you will engage in conversations with, because there's a lot of investors out there. Internet made the world super, super, super small. So you can, if you want to, as a CFO or in fundraising, you can set up 200 calls with 200 different investors. But I think it really helps if your current investors know who to speak to and what makes sense, so you can allocate your time wisely.
Yeah, I will take a question from the audience here, a little bit related to this topic. As a first-time founder, how many investors should you have on your long list for your seed round, and how do you get that list? It's a question from Friso. So just tying into that. Maybe Vainan, you want to start a little bit to start on that?
Yeah, I think when it comes down to investor selection, first, I think you need to consider what type of investment you're actually looking for and the size of the investment. So Sometimes it's better to go to friends, family, and fools, as they sometimes say. Possibly informal investors can play an active role in the early stages. And if you're looking for a venture capital firm, I mean, there are plenty of lists and directories around. There's the Dutch Venture Capital Association. Obviously, there are search engines that can help you finding the right investor list. There is M&A brokers who have long lists with all types of characteristics of the funders who best match your company or your funding need. You can talk to other entrepreneurs who have approached a lot of investors. Generally, venture capital is a relationship market or a domain. So it really is about getting to know the people and trying to get introduced to parties rather than sending a cold call. Once I was at an investor that has this email address, send your business plan at vc.com. So they have a general email address where you can send your business plan. And after a couple of months, it appeared that actually no one was picking up the messages on that email channel. So everyone was taking the serious applications only by phone and introduction. So really do network and try to find the investors that match your funding need and funding type.
Yeah. Claire, Ellie, any additions to that? And it's hard to say a specific number, right?
Yeah, I don't think you should focus on a specific number. If you have if you only need one, or you need one or a few good investors that can help you and that will bring you to the next level. And yeah, sometimes you need to approach 30 people, and sometimes it's 100 people. But don't get discouraged by that. I would say in general. I think what I also like to do is sort of look at the other players in the industry that are slightly bit ahead or at a similar level, and see what kind of investors they got on board. That's all public information. You can search your peers or competitors quite well, and so those VCs might be a good starting point to look at as well.
Yeah, good one. So we have a little bit more time. Peter, I know you had a second question for our panelists.
Yeah, the second question was what are the must-have financial slides in your Series A pitch deck? So how deep do you go in your initial pitch deck when sending that out to VCs, obviously when you've got a warm introduction to them?
Ellie?
Yeah, so I think like Claire mentioned, of course, try to sell the dream. In the end, what you're selling, if you look at it from, let's say, somewhat more remotely, is an opportunity for the investor to join a company that once will be worth a lot of money. And companies that are worth a lot of money typically share two characteristics. So they grow fast, and they have a business model that can lead to huge profitability. Now, according to your first question, your revenue perhaps is not yet there, but then at least try to make it as tangible as possible that A, the opportunity is there, and B, that you are in very well positioned to capture the opportunity. And I think an advice that I often provide on this matter is the metrics don't matter that much. As long as you adhere to what's market standard for your industry, if there is one. So if you're in SaaS, for example, everybody talks about MRR, ARR. Use those metrics and use very clear definitions, because the thing that you don't want is to later on in the process be confronted with ambiguity as to what it is you actually presented in your slide deck. Slight joke, but small example. Suppose you don't mention the currency ticker of your revenue numbers, and you're selling stuff in Venezuela, and you use the Venezuelan bolivar. Like, you don't want to be confronted later on when talking to the investor, and he thought it were euros. So use very clear definitions on any number that you present.
Good. Claire?
Yeah, so I thought about this question as well, and I think, one of the most important slides is the team slide. Of course, investors are going to invest in you, in your company, because they think the team can execute on what's in front of you, and numbers will always going to be different than from whatever you present today. We just know the future is unpredictable. But if you really want me to say a financial slide, then I would probably focus on what are you going to do with the money that you raise. So be super specific on, okay, so if I raise X, then I'm going to spend it on X, Y, Z. I'm going to hire so many people, and that's going to bring me to this and this level. So I will get to this stage so that from that moment you can start growing again. And I think that would be my if I were an investor as well, my main question: what are you going to do with my money?
Yeah.
And so that's something I would try to spell out very carefully and think about before you meet with anyone.
Yeah, important. Wijnand, do you want to add something to that question? The financial slides, Series A.
Yeah, if you really look at the financial parts of your pitch, in addition to what's just been mentioned, the challenge for startups really is that they don't have a lot of historical information, so they cannot prove their metrics, they cannot prove the market. So when you are projecting towards the future, definitely the revenue line, typically a hockey stick model or something, is important. So always show your ambitious scenario. But as you do not have the historical figure and the historical metrics, I think the assumptions underlying your forecast are very important. So in addition to the definitions and the assumptions and the way you treat the assumptions, you've set the assumptions about the growth or the underlying assumptions that create the growth are very important. And they should be defendable or justifiable if investors start asking questions about your underlying assumptions. So make it ambitious, but not overly ambitious. Always make sure that you can justify and explain the ambitious forecast you present.
Thank you, Peter. Any final thoughts on the panel's answers to your questions?
No, thank you very much. Yeah, the one other, how would this change? Would you change the approach if you're interacting with American VCs? I mean, should you be more bullish than and maybe not be too Dutch?
Good one, good one. We cannot let this one go. Ellie, I know you raised money. I mean, you all have both Dutch and international investors. What's your take? What's your experience with US investors?
Yeah, so I think in general, Anglo-Saxon investors are a bit more used to real big stories. So that makes a difference, but also don't underestimate the network effect. Like the most investors will know each other, so having two different slide decks to two different types of investors, I think is not a good idea. But towards an Anglo-Saxon investor, yeah, be optimistic, let's say.
A little bit more optimistic than with the Dutch one?
Yeah, I think that's the advice I would give. Yeah.
Claire?
Yeah, no, I fully agree with Eli on this one. And to be really honest, I don't have so much experience with American investors in particular.
Okay, great. Well, thank you, Peter, for your question, and thanks to the panelists. We are going to move on to our next founder who will ask the panel a question. That's Max Boody, entrepreneur and serial entrepreneur and investor. Oh, there you are. Max, PhD, addicted to impact startups. And you're currently CEO and co-founder of Play to Work, a company that helps MBO students to find suitable jobs. Max, great to have you with us.
Great to be here. Great to be here. Thank you very much for the invitation.
Yeah. So I'll just let you run with your questions to our panelists.
So we are a gamified matching platform for MBO candidates, and normally it's already difficult for a startup to make a step from seed funding, angel funding to Series A's. But when turnover grew by 30% each month at the end of 2019, things seemed a lot easier. Investors were lining up and driven by FOMO, fear of missing out. But then came COVID-19. So my question is, how do we attract new and appropriate growth money if the turnover due to COVID-19 is not yet at the desired break-even level? And I'm afraid my question is a little bit the same as the previous entrepreneur, but perhaps you can be a little bit more specific in the environment that we are in as a tech platform in the labor matching business. Thank you.
Thanks, Max. Yeah, I think it's worth we spending a little bit time on fundraising in COVID times. This is our new normal, and seems like we're going to be doing business this way for a while longer. So, Eli, you raised money last year during COVID. Tell us a little bit about that, and please tie into Max's question.
Yeah. So I think the process hasn't much changed because of COVID. So the process itself is still its meetings, its numbers, its assumptions, its discussions, yada yada. But I think to get to the question, if you are clearly impacted by COVID, I would kind of emphasize and try to elaborate on why that is really the case, because COVID will be used as an excuse by many to explain their results that probably have been a little bit below par. So if you can really make clear that there's a, let's say, one-on-one relation between COVID and your business not growing as fast as you would have liked, I think that helps. And I think perhaps it also helps to consider, like, for your business, there is a bit more risk than there was a year ago. And if you're basically looking for an investor who wants to share that additional risk with you, and there will probably be investors who like that additional risk because of the risk they get a better valuation, or they simply get a better deal. So I think I would try to really focus on that, and maybe also you have to accept that you'll get a little less good deal than you would otherwise have had, unfortunately, but truly.
Claire?
Yeah, so I've had a bit of mixed experience, I guess, over the last 12 months with terms of fundraising. Some parts it was more difficult than usual because we found that a lot of investors was focusing on their current portfolio, not so much looking outside to new investments. They had their hands full already, which I can totally understand. On the other hand, we've seen that some sectors have been booming, and it was almost easier than normal, to raise funds. So I've seen both cases, and I agree with Eli. The process hasn't really changed, except for that you don't have physical meetings anymore. So everything is going online, which makes it a little bit more difficult, of course, in the end, to assess the person or the people that you deal with. But in this specific case, what I would try to focus on is that you already had a huge growth month on month. 30% is really impressive. Focus on that, because everybody can understand how Corona has impacted the world, and we see it. Everyone sees it on a day-to-day basis. So investors are not crazy, and they're not out there to screw you necessarily. So
hopefully not.
Hopefully not. So then it's probably the wrong investor. So so in that sense, they will understand if you are able to explain very clearly what happened, why your numbers have fallen off the cliff in specific areas, and just try to focus on getting it back up there.
Yeah. Wijnand, what are your thoughts on Mike's question?
Quite similar, but a few additional notes. I think the fundraising process hasn't really changed, but the way you present yourself has changed, because we need to present ourselves online. So I think it's even more important that you have the right materials to show on your screen. So a very good pitch deck and metrics and finances. Make sure it's very well presentable over the screen. And secondly, if you have challenges raising funds right now because your revenue is not at par because of COVID, really do focus on showing how much your growth was in your revenues pre-COVID, and make sure that the investor understands that once COVID is history, your figures are likely to return to growth figures prior to COVID. So COVID is most likely a temporary phenomenon, and just try to communicate that this is just a temporary situation, and that after COVID, your growth get back again. If you really have challenges raising funds during COVID, you may have to take harsh decision to sweat it out or go back into the shelf or go inward and only go out back to investors once COVID is gone. At this moment, we at Virtual Gym, we assume that COVID is in control in the second half of this year, definitely by the end of the year. So that's how we present ourselves and how we make assumptions in the company.
Thanks, Wijn. And Max, what are your thoughts on the panelists' answers to your question?
Yeah, they really helped me a lot, and especially the answer of Wijnand. What we did was really sit back and relax and wait for the good times to return. Well, sit back and relax is kind of the wrong picture, because we worked very hard on a slightly different business model to bring up the revenues and the turnover again. So when we did that, and we managed to get the turnover on an acceptable level again, but via a different business model, some of the investors said, well, what is your company doing? Is this kind of a hybrid situation? Are you a platform or more a traditional broker of people? And in spite of that, we were proud that we made the changes in a quite rapid pace, and we were able to change it to positive figures. They said, well, we're now kind of dazzled by what company you are. So, in that retrospect, it's all about trial and error, I guess. As mentioned by the experts, it's really hard to find the real good investor that is challenging you and that is giving you the right energy also, of course, and the right direction to go further. But I'm really helped. Thank you a lot. One of the advices was also to use your network. So I'm going to be very blunt and dear ally Claire and Wijnand, if you have some nice network people from the finance world that we can call, and you want to do a warm introduction, yeah, you know where to find me. So thank you if you can do that for us very much.
Great, Max. Thanks. I will continue a little bit on your topic. And yes, I will let you guys manage the warm connections afterwards. But I want to touch upon what you all, Wijnand also mentioned it a little bit. I think, Max, this is probably something that you also consider. To which extent, due to COVID, do you have to pivot your business model a little bit? Because unpredictability, we all live with that, right? So you would have to think something that worked before. People go to restaurants, people go to gyms, people get hired. The labor market is going to be impacted by COVID. How should you think about that when you're in the fundraise process? Like, what are your thoughts on that, Eli?
Yeah, I think that's a really difficult question. Like I said before, you sell a stake in a company that's once going to be huge, or that you can present once to become huge. So if you shift from, let's say, a platform business with limited resources you need to scale it very largely, that's a totally different business than become a recruitment agency. So if you change your business model to become that recruitment agency, yeah, a recruitment agency is not attractive to a venture investor, very bluntly. At the same time, I do perfectly acknowledge that you need to stay afloat as a company, and you want to avoid liquidity problems. So you got to do something. But be aware that if you change your business model into something that's not scalable or not attractive, then you close the road to the investment capital, basically.
No, Claire?
Yeah, I fully agree with Eli here. I think you should try to stick to your plan as much as possible, because that's where hopefully the most growth is going to be after this is finished. But if you're in a business that is severely impacted by COVID, then you might need to pivot into a different business model. But I think that's really difficult to say. It depends really on the company. But the companies I worked with, we all stick to the plan because we knew it was good and it will come back.
Yeah. Great. So actually, Max, on your last comment there with the panelists, I have a question from the audience that I'd like to ask you. It's a comment from Jannike Nissen. She says the introduction, she works for Capital T, the VC fund here in the Netherlands, the introduction culture in fundraising is actually making it more difficult for certain groups of entrepreneurs to get funding. Not everybody has a network. We believe that VCs should ban warm intros. What's your view on this? Claire?
Yeah, very good question. Let me think about this for a second. Because yes, I definitely see that warm introductions favor people, some groups over others. And it might be one of the reasons why women raise so few capital, unfortunately, because they have a completely different network than I guess some other people. I don't think it's possible to ban warm introductions, but it would definitely be nice to, or better, to have a broader perspective. And I think there should be opportunities to meet VCs, for example, network events or other kinds of forums. But in my experience, I have sent a few pitch decks to what Wijnand was mentioning, to general email addresses, and I barely got any response. So then it's also up to the VC to actually look at these things seriously, and consider those proposals.
Yeah, maybe for the investor side to put in place a process that is a little bit less unbiased, maybe more data-driven, as you've seen in the recruitment business with anonymous CVs, etc. Wijnand, what are your thoughts on banning warm intros to VCs?
Banning sounds a bit harsh, to be honest. VCs somehow need to filter out all the leads they get in. So, and selecting via people and networks is probably a bit more efficient than from 100 emails a day or 100 business plans a day they get in, and they don't have the capacity to really look at all those plans and judge them and respond to the applicants. It's likewise applying for a job at Google. You will probably hear never back after you're being rejected. Another side note on this is that it sounds like there is a little bit of resentment towards the VCs here, and that's one of the dangers in approaching investors and VCs. Always try to be very positive, non-resentful. The financing community and venture capitalists are not the fault of your failure. It's always the entrepreneur who makes the faults and who also creates the successes. So be very careful in trying to blame an investor for anything, because that will be the end of your success in fundraising.
Thanks for that tip. I think that's a very interesting topic, actually. I want to hear what both Claire and Ellie, what you guys are thinking about this. How should you think about that from an entrepreneur point of view? Because it's normal if you get rejected. It's hard to get rejected, right? How do you work up to keep going and to not get too impacted by the fact that maybe one or a couple, several, you don't get a reply, the investors decline? How have you done that in your fundraising processes, Eli?
Yeah, well, I think I see the whole situation a bit different. Like, I think banning a warm intro is nonsense. Like, if I want to buy a second-hand car from my neighbor, like, why shouldn't I be able to do so? And it is more or less the same thing. It's like Wijnand mentioned. It's a filter, so they know, okay, Claire is an advisor somewhere, she forwards a deal, it's more likely to be a good deal than something out of the email box. So it's handled with a bit of priority, most likely. And then if you're fundraising, you are not declined because you're not a good person or a good company. You're just not a fit with the investment thesis of the person you're talking to. And that's not, I wouldn't for even the blink of an eye kind of be worried about that. It's just not how it works.
Yeah, that's true. Claire?
Yeah, no, I think my advice would also be not take it personal, right? It's just not the right fit. You move on to the next one.
Yeah.
What does help to reduce this bit of rejections is do a bit of research on the company you're talking to. Do they have companies in their portfolio already that look a bit like you? So at least in that sense, you narrow your own search and you do your own homework whether this VC could be an actual fit. So hopefully, then you reduce the number of investors that you approach. Hopefully, with a bit of a higher hit rate.
Yeah.
But I think you can also, as your own, when you're looking for funding as an entrepreneur, you can do your own. You have to do your own homework there as well.
Yeah.
Don't send it out to hundreds of people because who knows?
Yeah. That hit ratio will be pretty low, yeah. But I'll take another question here also from the audience. What is the most difficult or challenging question you have ever been asked by an investor? Wijnand, maybe you want to start?
The most difficult question?
Yeah, or challenging, yeah.
Can't really come up with one. I think the most challenging questions are on your revenue growth and the underlying assumptions. So typically entrepreneurs and CFOs try to forecast quite ambitiously, and that is one of the most important things to try to get over the line, that your projected growth is actually feasible. And it's quite easy to assume that 1% of every Chinese inhabitant will buy your product, but it's probably not feasible. Make sure, that may be a better answer, make sure that if you get a challenging question, you have the underlying data or assumptions ready to answer and address the question. So do not surprise yourself too much with very challenging questions. Be prepared.
Thanks. Claire?
Yeah, no, be prepared is key. I totally agree. And maybe try to see a challenging question as something that you can work on for your next pitch with the next investor. You can take that. Okay, if they challenge me this way, I might need to think about this a bit better.
In your experience, what has been some of the most challenging questions?
Well, I think it's what Wijnand says. It's about revenue, or just not believing in a specific issue or a problem. I mean, when I joined Fastnet 7 years ago, people would look at me like, electric cars, what's that? There was hardly any Tesla here.
Yeah.
So then it would be super difficult. You would get a lot of questions on is this going to be anything at all? So that was those questions were tough. Yes.
Eli?
Yeah, I think more or less the same. And don't forget that even if you project very ambitious revenue and you get the deal through the finish line, it's not that you can walk away afterwards. You're entering into a marriage. So I think the challenge is to balance ambition with a realistic outlook, because it doesn't make sense to sell a very bright story, get the money in, and then be in the first board meeting already kind of apologizing that the world looks different. So.
Yeah, indeed. So we have a little bit of time before we have to wrap this up, and I want to ask you I have another question here from the audience. What is the average ticket size for seed rounds with Dutch VCs? And would you recommend raising funds in Europe or in the US? Claire, well, you can ask maybe the first one on the average ticket size. You raised money with Dutch VCs?
Yes and no, because the investors at DOT were not really Dutch. And the ticket size there was 20 and 30 million, which is not representable for an average Dutch VC. So my guess would be sort of between the $500,000, sort of around the $500,000 mark to start as a seed investment. But I think in general, in the Netherlands, we're a bit too conservative. So I would hope to see that get bigger over time, because we might think a little bit too small sometimes here. Is my experience.
Thanks, Claire. I've heard that before through our sessions here. So I have to wrap up. So we don't have the time to answer more questions. But thank you, our panelists, for sharing your insights and your tips here with the audience. And We will continue with Techleap to work on all these topics for the community, for your startups, to help provide you with resources that can be helpful for you to successfully raise money and grow for global impact. So with that, I'm wrapping this up, and I'm handing it over to Frauke.
Thank you. Thank you, Ellen. Thank you, Eli, Claire, Wijnand, Max, and Peter for this inspiring session. At 4:15 p.m., we start with our closing session with an interview with Kat Bourlongan. She is the director of La French Tech. And furthermore, we have the authors of the book Blitzscaling, Reid Hoffman and Chris Ye, both very famous in Silicon Valley. Hope you join us. See you there.